you're planning to buy or sell a house, you might be interested to know what's going on with house prices and whether now is a good time to move. Now, the UK housing market has seen some incredible highs and lows over the past 18 months. There was a significant slump in both production and prices as the country entered into the first pandemic lockdown in March 2020, followed by a massive resurgence from June 2020 when society began to open up again during the summer. Now, a key driver behind this rebound was the introduction of a stamp duty holiday on the 8th of July in 2020, which offered buyers a saving of up to £15,000 on their stamp duty tax bill when purchasing a house. This, along with lower mortgage lending rates, ironically acted as a stimulus, driving house prices up by an average of £15,409 between June and November 2020. And that is according to figures from the Halifax. And that in effect wiped out the stamp duty saving. However, the promise of a tax saving still drove a surge in demand as many people reassessed where they wanted to live since the start of the pandemic. There has been an increased interest in properties outside major cities such as London, and with buyers putting more emphasis on outdoor space and more generous living space, driven by the trends towards working from home. The main stamp duty holiday ended at the end of June 2021, with a tapering until the end of September 2021, during which time buyers could still save a maximum of £2,500 off their tax bill. Of course, that's now ended. And although the pace of house price inflation peaked in May, it has continued to trend upwards even after the stamp duty holiday started to taper, buoyed by historically low rates on mortgages. Now, there has been a reintroduction of higher loan-to-value deals, with some requiring just a 5% deposit, opening up the market to more first-time buyers. However, as the stamp duty holiday came to an end, estate agents maintain that demand is still far outstripping supply. You will have seen this if you've been looking around for houses on Rightmove, trying to find somewhere where to buy. There just doesn't seem to be as many houses out there at the moment. Now, with demand far outstripping supply, it means that house prices have remained elevated. A Nationwide calculated that the annual UK house price growth is still at 10% in the year to September. Now, a rise in average wages and a downgrade of expected unemployment are helping to boost confidence, which could keep house price inflation steady over the next few months. Fears that house prices are going to fall dramatically in the near future could prove unfounded, although a potential change that could impact the housing market is the anticipated increase in the Bank of England's base rate in the coming months. If the Bank of England does choose to raise interest rates to help quell rising inflation, then mortgage rates could climb from their current record lows, and homeowners may choose to remortgage to a longer-term fixed rate deal rather than move house. If rates do go up, this will also make monthly mortgage repayments more expensive and limit the amount lenders will allow people to borrow because of their affordability calculations. Therefore, the housing market could see some turbulence if the base rate changes in the coming months, but without any official decision from the Bank of England, this is all just pure speculation for now. If you want to find out more information about current house prices from the UK House Price Index, Halifax, Nationwide, or even Rightmove's own figures, or you want to find out how much your property is worth, then head over to our article on the Money to the Masses website.